What is going on, everybody? This is Andrew from DeFiancy. So hopefully you can see my screen here. Maximize that. We're looking at Bitcoin right now. I want to go over Bitcoin first, and then we're going to talk about some of the things to look forward to that are going to affect the markets. And we're going to finish off this video talking about some DeFi stuff. So we're looking at the Bitcoin chart right now on the 4-hour, and you can kind of ignore a lot of these lines. In fact, I'll actually get rid of them for you. And we're going to look at this from scratch. So if you look at the bottom of this range here, we're looking at roughly, about 18K. The low was actually about 17.6. This caused a lot of people to freak out. And we're going to go into why this actually happened and why we're bouncing right now. But first, I just want people to kind of understand where we're at. So the top of this range is really about, I guess you could say about 21.6. And we've been kind of just dancing in here back and forth, right? The market hasn't really had a strong narrative to push us lower. As you can see, it did not want to go lower than 19. When you have multiple 4-hour candles that will just basically sit like on a floor like this, that's basically the market telling you like, hey, I'm not going lower. So that is accumulation, basically. That is whales and other market participants that are saying, I want to buy Bitcoin here. Now, they weren't actively buying. They were using what's called limit orders, which we can maybe go into that in another video if you guys are interested more in trading. But basically, it's absorption. It is big buyers that are buying Bitcoin, and there aren't enough sellers to push it lower. I don't actually think that this is the bottom, guys, but I do believe that we are going to see potentially some higher levels, some higher prices on Bitcoin. And one of the reasons why is because of the type of selling that occurred in this region right here. Okay. So Light Crypto, who is a pretty outspoken and somewhat famous crypto Twitter personality, I think says it best. I don't actually agree with Light on a whole lot of stuff in terms of short-term trading, but in terms of longer-term trading, he's actually pretty good. He says, expect people to shift from a comatose state of fear to the realization that tens of billions of dollars in forced spot selling, LFG, 3AC, lenders, and miners were a capitulation risk transfer rivaled only by the COVID crash. Guys, this is actually true. So we're going to go back here. This area that I circled here, this was 3AC. I can't even, I'm trying to actually write this out with my mouse. I'm not going to do that. But 3AC, LFG, miners, and Celsius. Okay. All of them had a lot of Bitcoin that was under the risk of a margin call. So as price went down, Celsius started to collapse. As they collapsed, it caused issues with other hedge funds and trading firms. But actually, the real thing that triggered this liquidation crisis was the Luna collapse. The Luna collapse caused Three Arrows Capital, that's 3AC, to lose about $550 million. That investment went to like $500. So they had about $550 million in Luna, and that turned into like $550 like overnight. Like, no joke. Like, it only took a few days. Less than a week. So what that did was cause a bunch of other people that had given money to Three Arrows Capital to trade with to also go under. So this is Voyager, this is Genesis, and a bunch of other people. But Voyager was affected, and BlockFi was also really affected to a very strong degree. So what Light Crypto is saying here is basically that this kind of selling pressure is really unprecedented. You had billions of dollars being market sold, spot by the way, during this cascade. this actually wasn't really a cascade in many ways. I mean, you could say that parts of it was. The cascade actually started really up here, but it was actually very controlled, and it didn't, I mean, a cascade in my mind is usually a lot quicker than this, but this was very controlled, methodical selling of people that were getting margin called, and they were selling billions of dollars of spot, which has a much different effect on the markets than derivatives. So I'm saying all this to say, those people are not around anymore to sell. You don't really have the risk to go down like you did up here. So it's very easy to see how Bitcoin's going to hold this level for a while. It's going to take new information, new fears, and quite frankly, people to get over leveraged again to push us down, at least significantly further. And I believe that will happen over time. But I could easily see this. Get rid of these blue lines. I could easily see this potentially playing around and filling this gap here. So if you look, there's a gap. This is called a volume profile. That's where trading occurs. See, there's a lot of trading here. There's been a lot of trading here, but there really hasn't been any trading going on here. A lot of times the market will try to fill these gaps. So I'm not going to be surprised if this ends up breaking this and ends up actually doing something in this range. Now, don't get me wrong. If it breaks this, it will shoot up very quickly. It could go all the way up to here, actually, around 27 to 25. I don't think it would hold though. I think over time it would get stopped out, and then you'd come back down here, and then you'd probably fill this in. Something like this. Ultimately though, I do believe that you are going to test more closer to the 10 to 13K range. And we're going to kind of get into that, why I think that. So if you look here, we're looking at an update, there's protests in the Netherlands. They're calling it the Dutch farmer protest. Wall Street Silver, this guy's, I would say, somewhat political, but he is following this better than anyone I've seen. I want to show you this phenomenon here we're seeing with these Dutch farmers protesting, because this is the start of something, in my opinion, much, much bigger than what people realize. Right now, we're facing an energy crisis of the likes we've never seen before. Now, we can go into why this is happening, but it gets political, so I'm not going to really go into it. But the reality is a lot of the green climate change policies are what are causing the issues in terms of our energy deficit and also the food crisis that is happening right now. Again, that's not a political statement, it's just reality. We incentivize companies to not, or we incentivize wealthy people to not invest in oil and gas companies. And now we're seeing the downstream effects of that. We've been incentivizing companies to invest in green energy for a decade, trillions of dollars of subsidies. But it happens to be that the green energy, although I'm a fan of it, is not able to produce the amount of throughput energy-wise to supply the world in its current form. So as we reduce the world's supply of oil, this is just the inevitable effect of that. The reason that I'm showing you this Dutch farmer protest is because this is the beginning of a revolution. There are millions and quite frankly billions of people in Europe that are going to be affected by this. The lower amount of energy that they're going to be able to consume. It's going to transform their society. Germany in particular has a lot to lose from this. Because they simply don't have the oil to drill, and they can't get the Russian oil that they're used to getting. So this is going to have very problematic effects for most of Europe, and quite frankly also Asia and really everybody else minus the United States and a few other countries. When you have less energy, you have less food, you have less cheap goods. It affects everything, namely the supply chain. I'm showing you this because what you're seeing with these protests happening in the Netherlands is going to spread to most of Europe, or a lot of Europe, Asia, Africa, the Middle East, and maybe even the United States. It's just a matter of time. Now, in the United States, things will not be as bad because we actually have an abundance of oil and food to offset the effects that you're going to see in other places, but it could still get bad enough to where prices are extremely elevated. But the food will be there. The issue for some other places won't be elevated prices, although there will be elevated prices. It will be that there simply isn't food to buy. That is a whole different scenario. That is what we call famine. And that is what we're probably going to see over the next several years. The reason I'm mentioning this is because, and we're going to go into this a little bit, is because the markets are not going to like what's going to come. This is why I don't think a bottom's in. If it wasn't for this, I would say the bottom probably could be in. But we lost a lot of wheat production that would have been introduced into the supply chains whenever Russia and Ukraine went to war. We were going to have issues even before that because there were fertilizer shortages and energy shortages before that. But this just basically adds fuel to the fire and it makes it so much worse. There's estimates that Ukraine has about 30%, 20 to 30% of the world's wheat supply, or that like where it's like capacity, where it's grown. We're going to lose a significant portion of that, and everyone knows that. So you couple that with fertilizer shortages, meaning a lot of people just simply didn't grow food, or they grew a lot less, or they decided not to grow food that needed fertilizers. You have a food shortage. Well, what happens when you have food shortages? This kind of stuff. This kind of stuff ends up happening. Basically, if you look throughout history, once the food runs out or becomes very expensive, you have riots. Riots lead to other things, and then the ability to project into the future is very, very difficult. Markets do not like uncertainty, but what if you had massive protest and civil unrest and political overturning in the Middle East, where a lot of the oil comes from? What do you think happens then? What happens when most of Europe is undergoing something similar in terms of political upheaval and political revolutions? You have widespread instability, and I don't think people are going to want to invest in risk assets when that happens. Okay, I could be wrong, but this is why until this situation gets fixed, I'm talking about the food crisis and political unrest that is inevitably coming. This would be the first time in history that it hasn't happened, when you have significantly higher food prices and shortages. Until we get that figured out, I see no reason to think that the market should be very bullish. But I do want to talk about some positive news here. So during all of this downtrend that we had over the last few weeks, all of these liquidations, DeFi was battle tested. Extremely battle tested. The most has actually been tested. And if you look at the actual total locked value locked in DeFi right now, and this is based on Ethereum alone, it's actually higher. We're at about 41 billion locked on Ethereum protocols right now. That's a lot. But what I really want to talk about is some of these winners here that showed that their systems work. Okay, one of them is Maker, Aave, Uniswap, Compound. All of these protocols have billions of dollars locked in them, and they didn't break down. Okay, they didn't collapse, they didn't turn off, they didn't have margin calls, at least in terms of, they weren't insolvent, right? They may have margin called their users, but that's how it's designed. So this was actually a significant win for DeFi to show that it can actually handle the worst of possible market conditions. I mean, you just can't get any worse than what Light Crypto is saying, with miners, huge hedge funds dumping billions of dollars of spot all at the same time. We've never seen that happen before. Even during the COVID crash, I don't believe that that was happening. That was more of just fear. That was fear and people basically hedging, not the same kind of situation. It wasn't a contagion during the COVID crash. This was a true contagion that wrecked people with a lot of money, and then it caused other people to get wrecked. Totally different scenario. So I'm very interested now, personally, in DAI, and I always have been. But one of the things I wanted to know is DAI, which is, by the way, that is the stablecoin that Maker handles. You supply ETH and other assets, and you can borrow against it with DAI. So DAI is a collateralized stablecoin, nothing like Luna, more like USDC. It's actually over collateralized, and this is a true decentralized stablecoin. And right now, you can earn about 3% by depositing DAI in Bancor's version 3 protocol that they have. And that may not sound like a lot, but this one's very not risky. That's why I'm showing it. But you have other options too, like USDC and other tokens. But like DeFi is still here, is what I'm saying. You can still earn yield. Okay, it isn't going anywhere. And there's actually places where you can earn significantly higher yield than 3%. I'm just showing you this one because I know it's safe, and it's one that I'm interested in getting people that don't want to have to worry about any kind of risk, or at least don't want to worry about a lot of risk. Okay, if you see 20% yield on a stablecoin, you should be very skeptical. This is why Luna. This is why we were always very skeptical of Luna or UST and the Anchor protocol, because it isn't actually, it isn't mathematically sound. Like at some point it's going to break apart. Low yields are low for a reason, because they're actually legit and safe. Anyway, I'm actually looking at the markets right now, and it's looking like it's starting to move up. So I think I'm going to end this stream. If you guys have any questions, make sure to send us an email, or hit us up in Discord. We're glad to chat, and look forward to putting out more content. Until next time, friends, happy hunting.